Hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Can you guys all hear me, and can you see my screen as well, please? Hi, administrator. Can I get confirmation of sound and screen, please? Hi, Adinda. Great, thank you. All right, fantastic. And you can see the screen as well. Okay, fantastic. Right. So before we get into the main presentation, guys, as always, if you if what you see in today's webinar, if it really resonates with you, please check out the Trend Trader. Please check out trendtrader.pro/app, which is the link to our apprentice training program. Just a brief background of myself. My name is Zaheer Anwari. I am a long-term trend trader, and as opposed to sort of short-term opportunities in the market, as opposed to being in and out of trades on the same day, I'm looking for a few trades really a year, and I'm looking to hold those trades for as long as possible. So and as that trend starts returning a profit, and as it starts moving in my favor, I then strategically compound into that particular trend. So that's the approach of trend trading, and it's a very beneficial approach. It's probably far more beneficial than most short time frame trading, because it's less time, profit is more consistent, there's no stress, small risk, large reward. There's a lot more benefits that come with long-term trend trading. The problem is that a lot of private traders are really not aware of trend trading, and the techniques that I use and the techniques that we use here at the Dynamic Trader, these aren't ultimately new techniques. A lot of these techniques have come from before the internet. It's just that the creation of the internet, as fantastic as it is, it's also, it's kind of directed traders, particularly private traders, down a route which is not always favorable and beneficial. So, this is what my webinars are all about. It's really to sort of connect with people and make people aware of the benefits and the approach of trend trading. And if it resonates with you, what you see today, then please check out the following website, which is trendtrader.pro/app. Okay, let's get into the actual presentation of today. So I'm just going to switch to my charting package. Excuse me, guys. Right, if someone could give me a thumbs up that they could see my screen, please. Administrator, maybe you can let me know. Yes, brilliant, thank you. And if there is anyone out there, I don't know who's out there, if you could all just give me a little heads up that you are sitting in on this presentation. If there's anyone out there in the chat room, just give me a little heads up so I know that I'm not talking to myself, and it'll be good to engage with people that are in the webinar. If you do have any questions, by all means, guys, please put them in the chat box and I will get back to you. Okay, let's switch to the chart. Now, what you can see in front of you is very much a typical chart setup of mine. I look for long-term opportunities in the market, and in order to look for long-term opportunities in the market, I need the charts, the time frames that allow me to do that. So I've got the monthly time frame at the top, and it's where the monthly I look for major levels of support and resistance. So I have a proprietary tool that automatically highlights major pivot levels. I've got these pink lines. Now, these pink lines are the annual levels. They represent the high, the low, and the closing price of 2015, so the previous calendar year. And down here, I've got the weekly time frame with the 200 moving average, which is black, and the 50 moving average, which is blue. And I've got the daily time frame also with the 200 moving average black and the 50 moving average blue. Now, the monthly is where I look for trend direction. Excuse me, let me correct myself there. The monthly is where I look for areas of support and resistance. The weekly and the daily time frame is where I look for trend direction and alignment. So I really want to see the weekly and the daily trending in the same direction. And the way I do that is by looking at where price is in relation to the moving averages. So in a strong bull market, I want to see price trading above both moving averages on the weekly and above both moving averages on the daily. In a bull market. In a bear market, I reverse the logic. I want to see price trading below both moving averages on the weekly and below both moving averages on the daily. If I don't have that set up, then I either stand aside and I ignore the chart, or if I do think that this chart is looking interesting as a particular trade, then I would reduce my risk. Okay, so when I have all my factors lined up, so I have a checklist that creates that entry point, that edge that I'm looking for. Then I have a checklist that creates that edge. If my checklist is met 100%, I will allocate a full 2% risk per trade. If one factor is missing from that, I either stand aside, depending on how important that factor is, or I would reduce my risk. So there is an element of discretion used, but you do want to be as mechanical as possible when it comes to taking trades. Hi, yes, thanks for coming in. AA, brilliant, thanks for coming in. Okay, thank you so much, guys. I feel much better now that I know there's people sitting in. So, thank you so much for that. It's a really weird feeling sometimes just talking to the screen and you're not knowing if there's someone out there. So thank you for saying hello. Okay, so yeah, going back to what I was saying, you want to have a checklist. Now, let's take a moment to understand what an edge is, okay? And it's really important as traders that you're able to define your edge. If you're not able to define or explain your edge, then the likelihood is that you don't have one. Okay, so you've got to be able to explain it in a very simple way. Now, what exactly is an edge? An edge is ultimately an advantage, an entry point into the market where you have more chance of returning a profit than a loss. But that's all it is. It's more chance of returning a profit than a loss. Okay, we're still playing on probabilities, and an edge is a high probability environment. It's not a guarantee. There's always a very real chance that that edge is going to fail. Okay, and this is ultimately what trading is. Trading is pattern recognition. Okay, it's about identifying an entry point into the a trend, if you like, because ultimately the pattern that I specialize in is trends. And an edge is an entry point into a trend that may or may not work out. If it works out, happy days, I will keep on compounding as that trend develops. If it doesn't work out, that's why I have a small risk, and that's why I have a stop loss. And that's why I have a wide stop loss as well, guys. You've got to allow price to do its thing. All too often, when traders get involved in the markets, what they're looking for is instant gratification. They want to get in, get out, make lots of money. And, part and parcel of why traders have that mindset and that philosophy and that thought process is because of the way trading is advertised on the internet. It's advertised as a way to quick riches. It's advertised as a way of, just open an account, put 50 to 100 pounds in that account. You've got free software there, and you can double your account every week for the rest of your life. And people generally kind of fall for the marketing and get involved, and surely but slowly they start eating away at their profits, at their savings, and before you know it, it's all gone. Or if you manage to preserve your profits, there's all of that hard work where you're in and out of the market, in out, winners, losers, and all of that time and effort for very, very little profit. By stepping away from that kind of that internet marketed creation of trading, and by looking at the bigger picture, that is where the consistency of trading is made. Now, you still need to have defined rules. You still need to have an impeccable risk management system, and you still want to have a very, very good way of calculating your stops, and those stops must always be wide. Okay, those 3 points there will put you in very good stead to allow for the markets to work in your favor. If the markets fail, you get out, cut your losers short. Losses are part and parcel of trading. But when you're in a winning trade, don't take your profit. Don't work on a 1-to-1 ratio or a 1-to-2 ratio, because you're really cutting the potential of making very good growth. When you're in a winning trend, let that trend continue for as long as possible in your favor, and repeatedly buy more of that particular instrument or sell more of it. The market's going up, repeatedly buy. The market's going down, repeatedly sell. Warren Buffett, he said that it's unnecessary to widely diversify your portfolio. And in fact, it's people who don't understand the markets who widely diversify their portfolio. Experienced investors and traders don't widely diversify their portfolio. Once they're in a winning instrument, they repeatedly add positions to that. And that's how you then get compound growth. Okay, so defining an edge, knowing your edge is instrumental to trading. For me, the best place to find an edge is on the larger time frames. Okay, just going to go to the chat box. Okay, no questions so far. Right, so if we look at the Aussie dollar, US dollar, we can see that price is trading between these pink lines. We've had good movement to the upside. So price was in a long-term bearish trend, came to the round number 0.70. We've had a move to the upside. So out of this area of consolidation, we've had a move to the upside. It's faced with several resistance levels ahead, including the round number 0.80 and the high of 2015. So as a trader, I'm looking for an edge. For me, an edge is above the high of last year. That's when price has a bullish edge, or below the low of last year where price has a bearish edge. If price is trading between these pink lines, I generally stand aside, particularly if price is faced with a lot of support or resistance levels, in this case, resistance. In addition to that, we can see that price is also faced with the weekly 200 moving average as a level of resistance. So it's above the 50, which is acting as support. The 200 is acting as resistance. On the daily time frame, we've got price acting, and we've got the 200 moving average acting as support, and we've got the 50 acting as support as well. So the daily is looking good. The 50, we've got a bit of mixed signals here because we're above the 50, we're below the 200. So the 200 is telling us bearish, the 50 is telling us bullish. So that's in conflict. In addition to that, price is trading between the pink lines, and there are a lot of resistance levels ahead. And you can see that price is struggling at the moment because we've got a resistance level here. All right, so if I just get my resistance tool, so if we just draw these sort of levels here, you can see it's quite messy around this level here with lots of pivot resistance levels. And you can see that's where price is struggling. And we've got more at these levels here. You can see there's a lot of pivot resistance levels, and that is why price is struggling to break through this area. So for me right now, this is not a level. These aren't levels that I want to get involved in. And that's why the Aussie dollar, US dollar is not a currency that I'm looking to trade anytime soon. Not until the earliest, when it clears all of these levels, gets to 0.80, clears above 0.80. If it clears this high point here, that's when we can potentially start looking for long opportunities. But for now, it's just not a very interesting looking chart. And remember, part and parcel of being a good trader, guys, is knowing where the money is. Okay. I will come back to that question. Okay. I'll come back to that question at the end. Part and parcel of trading or being a good trader is knowing where the money is. You don't want to have an attachment to any particular instrument. All too often you hear traders who only trade the euro dollar, or only trade gold, or only trade the majors. What if the money isn't on those currencies? Now I know there's the idea that the euro dollar is the most heavily traded currency in the world, and that probably lures people into trading the euro dollar because they hear that it's the most heavily traded currency in the world. But if most private traders lose money, which is a fact, they do, and all of them are trading the euro dollar, what does that tell you about trading the euro dollar all day, every day? Okay, it's not how it's done. A good trader doesn't have any attachments, has a big portfolio, and then is able to pinpoint where exactly the money is. Once you're able to pinpoint where the money is, you trade those instruments as long as they remain in trend. As soon as they start going against you or going into consolidation, you take your profit, you get out, you drop your attachment, you say thank you, you then move on to the next instrument that is in trend. And guys, remember, the foreign exchange market may not always be in trend. That's why it's good to look at stocks and commodities, because the market makers, they move between markets. They're not always in foreign exchange. This is the kind of information that isn't really told to you. Foreign exchange is just basically sold as this environment where you can make lots of money because it's the biggest market in the world. $5 trillion traded every day. But the trends, the market makers, the liquidity doesn't necessarily mean it's in that market all day, every day. Okay, the market makers, they're the people that we want to be following. They could be in stocks. Okay, so a good trader is able to identify where the money is, and that's where good software comes in as well, guys. It's not just about um, you understanding price action. Having good software really helps to identify where the money is. Okay, let's move on. If we go to the US dollar Canadian dollar now, if we compare the Aussie dollar US dollar to the US dollar Canadian dollar, so let's have a look at the Aussie dollar US dollar. We can see that the Aussie dollar US dollar is heading up slowly, but it's faced with a lot of resistance levels. If we go to the US dollar Canadian dollar, we can see that the US dollar Canadian dollar is also heading down. Okay, but let's have a look at where these next levels of support are. So if we start with the monthly chart, we can see that price is heading down. All right, it's now trading below 1.3, which is good. It's trading below 2000 and the 2009 pivot, which was acting as a level of support. This is now resistance. It's cleared this low, but we really need to see price break and close below this pivot low. At the moment, it hasn't closed and confirmed that. So we really want to see price breaking close below that. Then potentially we could start looking for shorting opportunities towards 1.2 and the pink line low. Now, at the very beginning, I said that if price is trading between these pink lines, you generally want to stand aside. However, look at the distance between where price is now and where that pink line's support level is. That's the low of 2015. You're looking at over 1,000 pips. That's potential to make a bit of profit. Now, this is where, if you did look to go short, you would reduce your risk because you are going against you don't have a bias in effect. Bias is above the high, which is bullish, and below the low, which is bearish. But inside it's a neutral bias, but the trend is down and there's space. So you could technically trade this, but reduce your risk. Now, if we look at the weekly, we're trading below the 50, but we're above the 200. The trend again is heading down, so that's looking interesting. There is that pivot, there is that whole pivot support, which was resistance, which is support, which is now acting as resistance. We want to see price confirm that by closing, and then we can start looking for shorting opportunities. On the daily time frame, we can see that the 50 is now crossing over the 200. So the 200 is starting to flatten out and head down. The 50 is definitely heading down. Remember, moving averages, they're lagging indicators. So you want them to confirm what price is saying. Don't use moving averages to predict. That's where a lot of traders go wrong. Moving averages are lagging indicators. So use them to confirm what price is doing. Look at how price is trending very neatly to the downside. This is what I mean by allowing a trend to establish itself. Of course, in hindsight, if I could get in at the top and predict the top of a trend perfectly, I would have got in here and I'd be holding my short positions. But, people who say that they can predict tops and bottoms perfectly, it's absolute nonsense. You can't predict tops and bottoms perfectly. People who do get it correct that one time, that's what they focus on. But all the 100 times they tried it before and they failed, that's suddenly magically forgotten. And what you tend to notice is that people who guess tops and bottoms perfectly, they're only ever around every so often. You'll hear from them once a month. Hey, look at what this trade that I've taken, I predicted it perfectly. Well, the rest of the month they've been blowing accounts and everything that they've been doing has been going wrong. So don't fall for all of that noise. Trading is a business. Allow a trend to establish itself. And this is a good example of allowing a trend to establish itself. Allow for factors to line up below the 50 on the weekly, below the 50 on the daily, below the 200 on the daily. Okay, we're above the 200 on the weekly, but there's good space. We're in between the pink lines and we're seeing support levels cleared. So potentially we could see weakness to the downside. Now, one point to note here is that the US dollar Canadian dollar, which I'm sure some of you guys already know, is that it is correlated to oil. And if you look at oil is actually pulled back to the, I think it's around $42 if I remember correctly. And it's just broken through the daily 200 moving average. So we really need to see price on oil as well start trending trending to the upside before we start looking for any shorting opportunities on the US dollar Canadian dollar. Okay, so this again, it is tempting to get in, but look at what oil is doing. I take charts on individual merit. I don't go too heavily into correlated pairs and look at A to do see what B is doing and then trade it. I take each chart on individual merit. However, there are times where you have to be aware of correlated pairs, correlated instruments, and that is because that is especially when instruments are at major levels of support and resistance, because there could be a bounce on one which would create a bounce on the other. So for now, US dollar, Canadian dollar looking interesting, but I'm not in a rush to get into it. Let's have a look at the euro dollar. Euro dollar still very much in an area of consolidation, and this is exactly what I mean by you don't want to be trading the euro dollar. That is a trend. This is when I was last involved in the euro dollar. I shorted it from 1.3 to 1.1. I then got stopped out around 1.1. That was a move of 2,000 pips. I held my positions for 8 to 9 months, and I had multiple compounds running, and I extracted 15,500 pips in a 2,000 pip move by compounding. And that grew my account by a significant percentage. Since then, the euro dollar has just been going sideways, and that is a very clear indication of it going sideways. And that is why you don't want to be trading the euro dollar. If you look at it on the weekly, again, you can see that there's a trend. Look at the consolidation. It's very messy. It's very choppy. Lots of support and resistance levels that make up that. Below the 200, above the 50. The 50 is kind of flat. And on the daily as well, you can see all very choppy. Look at what's happening today. Price is coming down. That's because it's come to a previous support resistance level, and we've had a bounce to the downside above the 50, above the 200, but the 200 is very flat, and the 50 is just sidewinding. Okay, so the euro dollar, again, not very interesting. So stay away from that. Don't trade the euro dollar just because you think that's what you should be doing. It's just not a very good looking chart. Let's move to the euro pound. All right, euro pound, a bullish move to the upside, and price came to, if we just compress it, actually, if we go to the monthly chart, we can say a bullish move to the upside. Now we're so far seeing indecision in the market, and that is because price is faced with this level here. This is a resistance level, and I mentioned in previous webinars that don't look to get into this just yet. We need to see price clear this level before we start looking for long opportunities. And you can see that price struggling to clear this. And that's why, we've had a move to the upside, and, the bears have come in and pushed price back down again. So it hasn't broken and closed above this. Those traders that got in quite early, went in long, you can see now that they're really being taken out. This is what is known as tree shaking. This is not the end of a trend. This is what is known as tree shaking. This is where traders that get in too early are taken out. Okay, it's only an end of a trend and a reversal when price actually really starts coming to the downside. At the moment, it's stuck between this level as resistance and the high of 2015 acting as support. So it's stuck between support and resistance. The trend is bullish. So my bias is very much bullish. But I need to see price confirm that. And the way price will confirm that is when we get a break and a close above the high of April. Break and a close above this level, and we could then see further strength, ideally towards 0.9 and then the figure 1. On the daily time frame, now look at what's happening on the daily time frame. We can see price is trading above the weekly 200 and above the 50. So we can see we've got a bullish bias, and the 50 is acting as support. Now, this is typical market movement. What we mean by that is whenever price breaks the 200, price tends to come back to retest it. And that's exactly what's happening at the moment. We are potentially seeing a bearish engulfing pattern, bearish engulfing candle here. And that could potentially suggest weakness to the downside, or this could just be a retest of support, price holds, and then a bounce to the upside. At the moment, it's very unclear what price wants to do. And so the smart option is to just stand aside. If you go to the daily, trading above the 50, trading above the 200, 50 very much heading up, 200 heading up. So again, telling us that we have a bullish bias to price. Now, if you look at the structure of the trend, price doesn't really move in a straight line. It's quite messy and quite choppy. So this is not unexpected. If you look at it, there's very messy periods here. Quite a deep pullback here. Continuation, bit messy. Another deep pullback. Another run up. Another deep pullback. So this pullback is no different to the current pullback. All right, it's coming back to this support level. What we're now looking for is for this level to hold strong, a bounce back to the upside, and a continuation of the trend. So it'll be interesting to see how this looks this time next week when we do our next webinar. For now, just not a very good looking chart. Now, of course, you do have those short traders who are coming in and they've said, oh yes, you know, I predicted this perfectly because price was at resistance and it was obviously going to bounce. Well, guys, this is my argument to that. Bear with me 1 second. This is the direction of the trend. This is the move to the downside. Okay, any trader that's coming in at this moment is totally against the trend, and they may continue to the downside, and in which case they may accumulate profit. But how many times will they have tried that before they got it correct? Right, and this is why reversal trading doesn't work. You want to be going in the direction of the trend, and each time the market breaks out, this is going to answer one of the questions that someone's asked: how do you add? Each time the market breaks out, you can add further positions. All right, that's what's known as compounding. So I tend to add on breakouts. Now, if you look, there's only one position running here, whereas along the trend, I've got multiple positions all stacking up profit. Okay, it's a far simpler and it's a far easier way to trade than, you know, trying to always predict tops and bottoms. You may be right. Think about it. A lot of reversal traders don't use stop losses. So if you think about it, let's say they make 10 trades. The first 9 trades all make them a little bit of profit. The 10th trade goes totally against them. They have no stop losses if they blow an account. I'm now going in the direction of the trend. On my 9 trades, I make I take 10 trades going in the direction of the trend. 9 of those trades are either losing trades or break-even trades where I don't make any money or I make a small loss of 1 to 2%. My final trade goes on for 8, 9, 10 months. And that's when I repeatedly compound. That is how I cover all of those small little losses, which generally don't rack up to more than 2, 3, 4%. But whereas a winning trend can then return me 20, 25, 30%. Okay, still no questions. I hope you guys are still out there listening to me. Let's move on. Let's move on to the pound Aussie dollar. Pound Aussie dollar, again, looking interesting. Further weakness to the downside. Every week we meet up, the pound Aussie dollar seems to just be edging further and further. However, it's faced with the low of 2015 acting as support. We need to see this cleared. We need to see 1.8 cleared. In addition, we need to see the weekly 200 moving average cleared. Okay, once those levels are cleared, the low of 2015, 1.8, and the weekly 200. Once these levels are cleared, then we can start looking for shorting opportunities. The daily is looking quite interesting, trading below the daily 200, and the daily 200 is hooking down, telling us momentum to the downside. The 50 moving average very much heading down, but more importantly, look at how the trend has changed. Look at how deep these pullbacks are. All right. Look at how deep these pullbacks are. Now look at how deep the pullbacks are. What is that telling us? What that's telling us is that the momentum is really to the downside. The trend structure has changed. And if this momentum continues to the downside, then this could prove to be a very, very lucrative trend. Okay, so keep an eye out on the pound Aussie dollar, but wait for the weekly 200 to be cleared, and then we can start looking for shorting opportunities. Pound Canadian dollar. Again, pound Canadian dollar looking very interesting. Further weakness to the downside, continuously weakening. However, there is support here, and you can see that price is currently bouncing at support. There is the low, there's 1.8. A lot of support levels ahead. In addition, close to the weekly 200. All right, so you've got the weekly 200 and you've got a support level here. This whole cluster area. If these levels are cleared, so if price weakens further, if these levels are cleared, then we can start looking for shorting opportunities. On the daily as well, You can see that it is trending to the downside. Not a bad looking trend structure. It can be a little bit messy in parts, but nonetheless quite neat and quite linear to the downside. It's these moves against trend where a lot of traders tend to struggle. It's these moves because a lot of traders aren't aware and they haven't taken time out to appreciate and embrace the natural features to price. The natural features to price is it doesn't move in a straight line. If you look at here, move, a little bit of a mess, consolidation, move, pull back, move, bit of messy, another move, pull back, another move up here, comes to the round number 2.1, and that's where it fails. Okay, so if you go back into the history, there's another. This is where I traded the pound Canadian dollar for, a very good growth on my account. Again, look at the movement. Move, bit messy in parts, but generally heading up. Okay, it's important to embrace the natural features to price. Otherwise, you'll always be stressed. You'll always be getting stopped out. Stop loss is always being triggered because they're not wide enough. It's always good to embrace natural features. Okay, the final currency we'll look at is the pound yen, and this is one that we've repeatedly talked about. Further weakness to the downside, below 160, just above 150. If it clears 150, then 140. If it clears this level, then like to see price come down to 120. Okay, if we look at the weeklies, looking good, below the 50, below the 200. The 50 is flat, the 200, still would like it to flatten out and start heading down. But remember, the weekly time frame it's a much slower moving time frame. What is price currently doing? Well, it's doing nothing more than coming to retest a whole sort of resistance zone here. Okay, so remember, price doesn't move in a straight line. Here's another good example. Move, pull back, breakout, retest of the 200, move, another retest of resistance, and we're now looking for further weakness towards 150, 140, 130. Round numbers make very good levels, very good target levels. On the daily, below the daily 200, below the 50, look at the 200. It's really hooking down. The 50 as well, really hooking down, telling us that there is strong momentum to the downside. And if you look at price, it always comes back to retest the 50. Come back there, retest the 50, there. So what are we seeing here? Well, we don't really want to see price come all the way up here, but if it does, then that's part and parcel of trading. I've got positions running. I've been short on the pound yen for quite some time now. Significant, profit being handed out. This is now where I'm standing aside. I want to see price break below this support, and this is when we can look to compound further. But just be aware of the fact that we have 150 ahead, because 150 is a half figure. That is a strong level of support or resistance. But remember this, guys, support and resistance levels usually get broken when price is in a trend. Yeah, so let price clear support and resistance in the direction of the trend and then continue compounding or adding new positions. Don't predict reversals at support and resistance. They're short-lived. Okay, and the last currency we'll look at before we end the webinar, guys, is the dollar yen. So if you do have any questions, please put them in the chat box. The dollar yen, now we're seeing weakness to the downside. Now have a look at what's happened this month. We in the last webinar I mentioned that, or in fact, since price was between these pink lines, I've been visiting the dollar yen week in, week out, saying be patient. I would allow for the low of 2015 to be cleared. We had that. Then I said allow for 110 to be cleared, and we're now trading below 110. Okay, so we can see that levels are being broken, and if we do start to get further weakness, then we could see weakness all the way to 100. If it clears 100, then all the way down to 80, and these levels here, which are the lows of 2011, 2012. If we go to the weekly, trading below the 50 but above the 200, so not looking ideal. We really want to see the 200 cleared on the weekly, but on the daily it's looking interesting, below the 200 and below the 50. But look at what's happening. Price is now pulling back. Why is it pulling back? Because there's 110. Price cleared 110, but it did not retest 110. And that's what it's now looking to do. And we want to see this retest. If you look at this bar here, it was a pretty strong move to the downside. In fact, it could almost be an overextended bar. if there are overextended bars, then price tends to, move back, correct, and then move again in the direction of the trend. Okay, so this is nothing more than a retracement to the 110 level. We'd like to see this hold strong as resistance, a break and a close below here, and further weakness. Okay, guys, that is everything. Are there any questions? I'm just going to grab some water in the meantime. So if you do have any questions, please put them in the chat box. Okay, no questions coming through. Okay, all right, fine then. That's great. Okay, well, thank you all very much for attending the webinar. I hope people are still out there. I know trend trading isn't sexy. I know it isn't exciting, like day trading and scalping, but as George Soros said, if you're having fun in the markets, you're probably not making any money. So trading is not about being exciting and about being fun. It's not a casino. This is a business. It's interesting, enjoy the process, enjoy learning it, but don't have fun in the markets. The real fun and excitement comes from the lifestyle that trading will give you. And if you're a slave to the computer, if you're staring at the computer all day every day, then you're really missing out on the empowerment of what trading can give you. So get away from thinking that you need to be in front of your screen all day. Okay, guys, I'm just going to direct you to a few pages. trendtrader.pro/app. Please check it out, guys. This is £99 for a whole month. You get a strategy, you get community support, there's a video portal, FX training, stocks training. There's just a lot that goes into it. All right, so please check this out. And on here, there's a video where it's kind of like a testimonial video. You'll get an idea of what some of our current members are saying. If you want a free ebook, guys, a great place to start on trend trading. This is a free ebook. Okay, right, brilliant, guys. Thank you all very much. I hope you're all having a wonderful morning, afternoon, evening, wherever you are, and I will see you guys on the next scope, okay? On the next webinar next week. Right, guys, brilliant. Thank you all very much. Take care. Bye-bye.